There are 4 types of mortgage lenders out there that you can get a traditional residential mortgage from: brick and mortar banks, mortgage banks, direct lenders, and mortgage brokers. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to inform you on what's a mortgage. If it's your first time tuning in, do me a huge favor. Hit the subscribe and notification button so you're notified every time we go live or post new content. We go live every Monday night at 9 p.m. and we post content daily on Facebook and Instagram. Also, this is an interactive channel, so ask a lot of questions and leave comments. In this video, we're talking about mortgage lenders. Let's get into brick and mortar banks. A brick and mortar bank is a bank where you can take your money, deposit to a checking, a savings account, or open a credit card from. For example, Bank of America, Wells Fargo, Citi, Chase, or any local credit union. These type of lending banks are usually pretty conservative, which means they don't take big risks. The good thing is, if you have a lot of money with them, they're willing to take big risks on you. They specialize in people with big net worth, jumbo loans, and conventional loans. And their rates are fair, but it all depends on where the economy's at. If the economy is bad, then they raise up their rates because they don't want to take risks. But if the economy is good, then their rates are fair. So if you're thinking about going to a brick and mortar bank, don't go during a bad economy. And if you have a lot of money with them or a high net worth, they're willing to take big risk on you and give you a smoking deal. They'll do everything they can to keep your money with them. And that's how brick and mortar banks work. Now let's talk about mortgage banks. They're very similar to brick and mortar banks. They have their own money, they fund their own loans, and they have their own staff. But they do not allow regular deposits like brick and mortar banks or offer credit cards. Examples of mortgage banks are Quicken, Loan Depot, Guaranteed Rate, and New American Funding. They specialize in renovation loans and escrow holdback, which are loans that require funds after a loan funds. Mortgage banks also specialize in new construction, FHA VA spot approvals, down payment assistance, and USDA loans. Also, if you're a home buyer with a very sticky situation, non-traditional income, or adding multiple co-signers, mortgage banks offer underwritten approvals, which means an underwriter actually approves the loan before you actually find the house. This is important because it minimizes the chances of you falling out of escrow. Same with brick and mortar banks. Mortgage banks' rates fluctuate depending on the economy. They operate just like brick and mortar banks, but exact opposite. If the economy is doing bad, their rates are good. But when the economy is doing good, their rates are okay. Now let's move on to direct lenders. Direct lenders are very similar to mortgage banks and brick and mortar banks. They have their own staff, they underwrite their own files, and they fund their own loans. But after they fund your loan, they'll sell it to a mortgage bank, a brick and mortar bank, or a big mortgage wholesaler. They're good for first-time home buyers who have their down payment and closing costs. They're good with conventional loans, FHA loans, VA loans, and credit scores 640 and above. What I don't recommend them for is down payment assistance, jumbo loans, USDA loans, condo spot approvals, renovation loans, or escrow holdbacks, or anything out of the ordinary. They're really good when it comes to vanilla loans. Last but not least, let's talk about mortgage brokers. Mortgage brokers will broker your loan to big mortgage wholesalers like United Wholesale, Quicken, Fairway, or Home Point. Mortgage brokers will typically have very low rates and fees, but they don't underwrite their own loans. They send it to wholesalers to underwrite and fund. I don't recommend them when it comes to down payment assistance, USDA loans, spot approvals, renovation, or escrow holdback loans. I don't recommend them for jumbo borrowers who are self-employed or FICO scores under 640. If there's a loan that you have to think outside the box to make the deal happen, I don't recommend mortgage brokers. So here are my final recommendations. If you're a first-time homebuyer and you're a wage earner and you have your down payment and closing costs, I like mortgage brokers and direct lenders. And if you're a first-time homebuyer and you need down payment assistance, I recommend mortgage banks. And if you're a first-time homebuyer and you're self-employed, I like direct lenders and mortgage banks. If you're a non-first-time homebuyer and you're self-employed, I like mortgage banks and brick and mortar banks. And if you're not a first-time home buyer and you're a wage earner and you have equity from another home to buy your next property, I recommend small direct lenders and mortgage brokers. And if you got a jumbo loan, I recommend mortgage banks and brick and mortar banks. If you're going with a renovation loan or an escrow holdback, or if the property needs a spot approval for FHA or conventional, I would go with a mortgage bank. If you're self-employed and you didn't file your taxes yet, I like mortgage brokers. They have non-qualified mortgage products for self-employed people who didn't file. If you're going through credit repair before you buy, I like mortgage banks and direct lenders. If you're thinking about doing a refinance, I would go to a direct lender or mortgage broker. Since you already qualified when you bought your home, it should be easy to qualify again. If you're buying new construction in the earlier phases, I recommend you go to a mortgage bank. But if you're in the later phases, I think you should definitely go to a mortgage broker. And that's all my recommendation. I hope this video brought you tons of value. If it did, do me a huge favor. Save this video, share this video, and like this video. We want to end all our episodes with, our attitude is gratitude. Without you, there'd be no us. Today I had to choose, like, do I hold on to the Fibonacci theory or do I hold on to this right now? I had to drop the Fibonacci out of my brain and my memory just to get this one down.